SpaceX is worth $1.8 trillion right now, more valuable than Boeing, Lockheed Martin, and Northrop Grumman combined. But here's the number almost nobody talks about. 95% of that stock cannot be sold. Not by employees, not by early investors, not even by Elon Musk. When SpaceX went public in June 2026, only about 4% of its shares hit the market. Everything else, 13 billion shares built up over 2 decades, sits behind a wall called a lockup. In the next 15 minutes, I'll show you who is holding that locked stock, the exact calendar of when it unlocks, what happened the last time a company this size tried this, and why the coming months could decide if SpaceX stock becomes a wealth machine or a slow bleed. And I want to be clear from the start, this isn't a story about rockets or Starship or Mars. It's a story about supply and demand, about who controls the float, and about dates on a calendar that matter more to this stock than any launch will. Let's get into it. Let's start with the ownership map, because the 95% isn't one big block, it's several very different blocks. SpaceX has roughly 13 billion shares outstanding. In the IPO, the company sold 555.6 million new shares at $135 each, raising $75 billion. That was 4.3% of the company. Everything else was already sitting on the cap table before the IPO, and none of it moved. Elon Musk personally holds around 42% of SpaceX's equity, but through Class B supervoting shares, he controls roughly 82% of the voting power. That gap between money and control is unusually wide, even by Silicon Valley standards. Mark Zuckerberg controlled about 58% of Meta's votes at its IPO. Musk's grip on SpaceX is far tighter than that, and every one of these numbers matters for what happens when the lockup starts breaking apart later this year. Beyond Musk, there's a long list of institutional holders who each control a locked slice of the company. Alphabet, Google's parent company, invested $1 billion alongside Fidelity back in 2015, when SpaceX was valued at just $10 billion. That stake is now estimated at around 6.7% of the company, worth roughly $100 billion. Fidelity's own Contra Fund has also been a major holder for years. Peter Thiel's Founders Fund got in even earlier, through a $20 million investment in 2008, a stake that's reportedly appreciated more than 60,000%. Sequoia Capital and Andreessen Horowitz joined in more recent rounds, and sovereign wealth funds like Qatar's QIA and Abu Dhabi's MGX came in through the 2026 merger with XAI. Every single one of these holders is currently locked, along with thousands of current and former SpaceX employees. Now let's talk about why that tiny 4% float made SpaceX's stock so wild in its first few weeks. On day 1, June 12, 2026, shares closed near $161, up about 19% from the $135 IPO price, pushing the market cap above $2.1 trillion. That's basic supply and demand. When only a small sliver of a company is actually available to trade, it doesn't take much buying pressure to send the price sharply higher, because there simply aren't enough sellers to absorb the demand. But the same mechanism works in reverse. Within weeks, the stock had round-tripped and then fallen below its own IPO price, trading around $131, roughly 42% off its post-IPO high. A small float cuts both ways, and SpaceX was about to find that out the hard way, especially once the calendar started working against it. Part of that drop wasn't about the lockup at all. It was about the rockets. In mid-July, SpaceX aborted a Starship launch attempt moments after ignition, and the stock slid roughly 3% that same day to an all-time low as a public company. Investors were reminded that behind the trillion-dollar valuation is still an experimental vehicle program that hasn't nailed a fully reliable flight cadence. That matters here for a specific reason. Part of the lockup schedule we're about to walk through is directly tied to earnings reports and to specific stock price milestones, not just to fixed calendar dates. So a rocket failure doesn't just hurt sentiment for a day, it can actually change which tranches of locked stock become eligible to sell, and when. The business and the stock price are now wired together in a way they never were while SpaceX was private. And that's exactly where the lockup structure gets unusual. Most IPOs use one simple lockup, 180 days, then every insider is free to sell on the same morning. That's what created the infamous single-day crashes you've probably heard about with other companies. SpaceX's underwriters built something different this time. Instead of one release date, the locked shares come out in a staggered sequence tied to specific triggers. The standard 180-day lockup does still exist as a backstop, expiring December 8, 2026. But well before that date, roughly 20% of the locked share pool becomes eligible for sale right after SpaceX reports its first quarterly earnings as a public company, expected in late July or early August. That single trigger alone unlocks more stock than most companies' entire lockup releases combined. And it's just the opening move in a 5-stage schedule that runs all the way through the end of the year. Here's the full schedule, and I want you to actually picture this as a calendar, because it matters if you're trading this stock. Stage 1, roughly 20% of locked shares, unlocks 2 trading days after the Q2 earnings report, expected early August. Stage 2 is unusual. It's price-triggered, not date-triggered. About 10% of the locked pool unlocks the moment shares trade 30% above the $135 IPO price, meaning $175.50. Stage 3 and 4 are smaller tranches of around 7% each, landing through August and September. Stage 5, tied to Q3 earnings, releases roughly another 28%. Then whatever remains clears on the standard 180-day date, December 8th. That's the ordinary insider pool. Musk's own 6.4 billion share block sits completely outside this schedule. So what actually happens to a stock when a wave of insider supply hits the market? History gives us a mixed answer. Facebook's lockup expirations in 2012 triggered repeated waves of selling that dragged the stock down for months after its IPO. Rivian and Beyond Meat both saw sharp drops around their own lockup expiration dates, as employees and early investors rushed to lock in gains after being restricted for months. But that's not the whole story. Research from Reuters covering post-IPO underperformers shows a median rebound of around 61% for stocks that got hit hard around their lockup, once the initial selling pressure worked through the market. In other words, a lockup expiration is usually a short-term supply shock, not a permanent verdict on the company. The real question for SpaceX is whether its staggered structure spreads that shock out or simply delays and stretches it across several months instead. Let's put a real dollar figure on the first big test. Analysts estimate that roughly $123 billion worth of shares become eligible to sell in early August, when the earnings-triggered tranche unlocks. To put that in perspective, that's about 68 times the size of a typical lockup expiration for a large-cap stock. Nothing in recent market history compares to it in raw scale. Now, eligible to sell doesn't mean everyone actually sells. Long-term believers inside the company, and Musk himself through his separate, still fully locked position, aren't part of this pool. But even if only a modest fraction of that $123 billion worth of stock hits the market, it would represent a meaningful jump in available float, more than doubling or tripling the tradable supply of SpaceX shares almost overnight, which is exactly why traders are circling that August date on their calendars right now. This is why analysts keep calling the August unlock a signal rather than a cliff. It's the very first honest read on how insiders actually feel about a nearly $2 trillion valuation. If early employees and longtime backers largely hold their shares through that window, it tells you something powerful. That the people closest to the company, the ones with the most information about how Starship, Starlink, and the AI data center push are actually going, still believe the stock is undervalued. If instead a large share of that pool sells quickly into the opening days, it sends the opposite signal, that insiders are happy to cash out at these prices while the market is still willing to pay them. Either way, the Q2 earnings report itself becomes almost as important for what it triggers in the lockup as for what it says about the actual business. Watch trading volume in the days right after. That's where the real answer shows up. Now let's talk about the event that actually matters most, and it isn't in August at all. Elon Musk's personal block of about 6.4 billion shares stays completely locked until June 12, 2027, a full year after the IPO. No other single date on this entire calendar carries more potential impact on supply. At current prices, that stake is worth somewhere in the range of $800 billion to $1 trillion, which made Musk, on paper, the world's first trillionaire the moment SpaceX went public. Nobody expects him to sell anywhere near all of it. His incentives, his identity, and frankly his control of the company are all wrapped up in keeping the bulk of that position. But even a small percentage sale from a block that size would represent one of the largest single insider transactions in stock market history, and the market knows it's coming a full year in advance. There's also a tax angle here that's shaping behavior well before June 2027 arrives. Employees and early investors who receive stock through tender offers or options over the years face capital gains taxes when they finally sell, and wealth advisors have been actively helping SpaceX holders plan exit strategies since well before the IPO. Things like tax loss harvesting and exchange funds to soften the hit. That planning activity is itself a clue. It tells you that a meaningful number of insiders are not just holding out of loyalty, they're holding because they're actively structuring how and when to sell in the most tax-efficient way possible. That points towards selling being spread out deliberately over time rather than dumped all at once, which lines up with the staggered lockup design and suggests this was intentional from day one, not an accident. And it's a very different picture from a typical single-day lockup panic. Here's something important that a lot of coverage misses. Even if every locked shareholder sold every eligible share the moment their tranche unlocked, Musk's control of the company wouldn't meaningfully change. That's the entire point of the dual-class share structure. His Class B shares carry roughly 10 votes each versus 1 vote for ordinary Class A shares sold to the public, which is how he holds 82% of the votes, with only 42% of the equity. So unlocking stock changes who owns the economics of SpaceX and how much stock is available to trade, but it does not change who runs the company. That separation matters for how you should think about these unlock dates. They're a story about float and price pressure, not a story about a boardroom power struggle or a threat to Musk's leadership. And that's worth remembering every time a headline makes it sound scarier than it is. So if you're actually tracking this stock, here's what to put on your calendar. First, the Q2 earnings date, expected early August, since it triggers the largest single tranche and gives you the first real read on insider behavior. Second, the $175.50 level, because crossing it doesn't just mean a rally, it mechanically unlocks another slice of stock, which could cap further upside in the short term. Third, watch trading volume and price action in the 2 to 3 trading days right after each unlock date. That's historically when the bulk of lockup-related selling shows up, if it shows up at all. And finally, don't ignore the small tranches through August and September. They're less dramatic individually, but stacked together they add real supply before the December 180-day date even arrives. So this isn't a one-time event, it's a season. So here's the real takeaway. SpaceX going public wasn't the end of the story. It was the start of a much longer unwind of 95% of a company most of the market has never actually been able to trade. Every unlock date between now and June 2027 is a live test of whether the people who know this business best, employees, early investors, and eventually Musk himself, still want to own it at these prices. The rockets and Starlink satellites make the headlines, but this calendar of unlocking shares will likely move the stock price more than any single launch this year. If you're holding this stock or thinking about it, don't just watch the sky, watch the float. That's it for this one. If this breakdown helped you understand what's actually coming, subscribe, and I'll be tracking every one of these dates as they happen, so you're never caught off guard by the next tranche.